before we get started, let's check out the links in my description. We all want nice things. We want the car, we want a house, we want a high limit credit card. But if you don't have at least a 680 credit score, you're not even in the game. So click this link here to know where you stand and get your free credit scores from all three bureaus. That will be Experian, TransUnion, and Equifax. And also get your reports. If you would like to be free and become financially independent through entrepreneurship, click this link here to be free. If you'd like to get cash back, which is a discount during shopping, please click this link here to see my favorite cashback sites. And if you enjoy the music you hear in the background, please click the link here and subscribe to It's Oasis. Hello everyone, welcome back to Community Wealth. Today we're going to talk about Womply BlueAcorn. It's about the PPP, but it's not about anything progressive with the PPP as far as funding. But it is talking about how much Womply and BlueAcorn came up off of the PPP loans. It's just an indication, or I should say an example of how you can create wealth out of solving a problem, creating a need, or I should say fulfilling a need. This is pure example of that. I'm going to get into this article. The article, I won't say it's pretty lengthy, but I think it's a good read. You should check it out. It's in the New York Times. Well, we're going to get into the article right now. This article came out on the 27th of June, 2021. The New York Times says how two startups reaped billions in fees on small business relief loans. BlueAcorn and Womply processed 1/3 of all Paycheck protection program loans this year, stepping in when big lenders wouldn't. Talks about this guy, Dan Bork, an Uber driver in San Francisco, saw Womply's ads and applied for a loan in mid-April. 17 days later, he had a $10,477 deposit in his bank account. The article reads, though Congress approved billions in aid for small companies to help them keep paying their employers, Though Congress approved billions in aid for small companies to help them keep paying their employees during the pandemic, there was a big problem. It wasn't reaching the tiniest and neediest businesses. Then two small companies came out of nowhere and, through an astute mix of technology and advertising and the dogged pursuit of an opportunity that big banks missed, found a way to help those businesses. They also helped themselves. For their work, the company stand to collect more than $3 billion in fees, according to a New York Times analyst, far more than any of the 5,200 participating lenders. One of the companies, BlueAcorn, didn't exist before the pandemic. The other, Womply, founded a decade ago, sold marketing software. But this year, they became the breakout stars of the Paycheck Protection Program, the government's $800 billion relief effort for small businesses. Between them, the two companies processed 1/3 of all PPP loans made this year, the Times analyst found. Again, you see opportunity, you see a need, and you fulfill it. That's awesome. I can't even get mad at them. That's just great. I mean, I kind of talk about this a lot. I talk about it all the time. You see an opportunity and you seize it, or you see a problem and you go and you create a solution. Even if you did it for yourself. Again, how I talk about how they stopped the FPUC. They stopped the FPUC. You say, okay, fine. I need to figure out how I'm going to solve that problem. And oftentimes you will actually do better than before. Again, with the FPUC, yeah, you stopped it. They stopped it. You don't make $300 extra anymore for your unemployment. Now your unemployment is only about $400 a month. But then you go out and you say, okay, they have Uber, they have Lyft, DoorDash, Instacart, all the other ones like that. And you can end up, let's say Amazon Flex, you can end up making 3 to 4 times that in a week. So now you go from $300 to upwards of $1,000+ per week, because you see that opportunity there. Sometimes you just have to take action, and that's it. Just take action and you will reap the rewards. Let's continue. BlueAcorn and Womply aren't banks, so they couldn't actually lend any money. Let's say it again. BlueAcorn and Womply aren't banks, so they couldn't actually lend any money. Let's read that one more time. BlueAcorn and Womply aren't banks, so they couldn't actually lend any money. Rather, they acted as middlemen, charging into a gap between what big banks wouldn't do and what small banks couldn't do. First, they unleashed marketing blitzes, encouraging freelancers, gig workers, sole proprietors, and other small merchants to apply for loans through their websites. Next, they directed those applications to lenders. In return, they took a hefty cut of the fees that lenders made on each loan. Millions of businesses were being left out, said Barry Calhoun, the chief executive of BlueAcorn, which was founded last year solely to help companies obtain PPP loans. Their whole purpose in existence was to get small businesses and sole proprietors and self-employed individuals PPP loans. That's why they founded themselves. Tiny businesses, self-employed individuals, and minority communities are left out in the cold over and over and over. Addressing that is a core mission for us. When the government started the Paycheck protection program in April 2020, it quickly found that banks from national giants to regional players gravitated to bigger loans to more established businesses because they were easier to make and more lucrative. The program's largest lender, JP Chase, refused to even make loans of less than $1,000. Remember, I made videos about this. I talked about how the banks wouldn't do that, and you had to go to these smaller ones. A lot of people complain, but that's how you're going to get the loan. You couldn't get it from the big banks. Remember, Navy Federal shut down quick. PayPal, even though they are a fintech, they wouldn't do anything. So it's kind of hard to get it. To encourage banks to lend to smaller businesses, Congress in December raised the fees for small loans, and in February the government tweaked the program's rules so that unprofitable solo businesses, which had previously been ineligible, could get loans. Suddenly there was a lot of money to be made if only someone could get businesses in the door. Literally, free money for those who qualify. A BlueAcorn advertisement on Facebook read, "Womply banners adorn billboards and New York City buses. Get up to $50,000 in PPP. Read 1. Apply now." I've seen those ads. I mean, I see it all the time. I saw billboards going down 95. Those appeals were wildly successful. From late February to May 31, when the program ended, the companies processed 2.3 million loans. Most were for less than $17,000, and the vast majority went to solo ventures, which are more likely to be run by women and people of color. All that hustle had downsides, including widespread customer service failures, and some lenders now have regrets about signing rush deals that delivered most of the profit to their partners. And this where the problem came in. As you read in the comments of most of my videos, people had problems with customer service. They couldn't get in contact with these people. They couldn't get in contact with the lenders. They couldn't get in contact with Womply. And apparently BlueAcorn had the same situation. Even though I've heard BlueAcorn was a little smoother, but it was on both sides where the customer service was terrible. There are people right now who never got a loan, who applied probably back in March and April. Never got a loan because of whatever the situation was with their application or their bank account, but they could never get in contact with Womply or the lenders. That was a huge problem. A light bulb moment. In December, Congress said that banks making Paycheck protection program loans below $50,000 would be paid 50% of the loan's value, up to a maximum of $2,500. Earlier, the maximum a lender could earn was 5% of a loan's value. So a $5,000 loan that previously made the lender $250 was now worth 10 times more. By making small dollar loans more profitable for lenders, Congress was hoping to help the neediest. And here's a chart of what's going on. More small PPP loans were made in 2021 than in 2020, and even more fees were earned on them. An increase in the fees that banks receive for issuing the smaller loans made them more lucrative. You can see right here, size of loan up to $50,000 in 2020 and 2021. All right, over $50,000. Then you see here fees earned on PPP loans, 2020, 2021. So far in 2021, the federal government has paid $13.6 billion in fees on loans of $50,000 or less. But reaching out to borrowers and collecting their paperwork were still challenging, or for BlueAcorn and Womply, a light bulb moment. BlueAcorn, based in Scottsdale, Arizona, was founded in April 2020 to help small businesses find PPP lenders. After Congress made the fee change, the group of entrepreneurial coders who founded the startup decided to build a system to simplify the paperwork, betting that it would encourage more lenders to make loans to the smallest businesses. In San Francisco, Toby Scamell, the chief executive of Womply, had a similar idea. Founded in 2011 by Mr. Scamell and backed by venture capitalists, Womply provides restaurants, retailers, and other small enterprises with tools to manage their customer lists, marketing campaigns, and payments. Mr. Scamell had earlier discovered that banks didn't want to bother with PPP loans for many of Womply's clients. I can believe that. We tried to convince lenders to serve the smallest businesses and they said no, Mr. Scamell said in an interview last month. I just couldn't get them to do it. I finally got fed up and said, here, we can hand it to you on a silver platter. And here you go, the ad right here. It's actually on their website when you log in. So in late February, Womply started a web-based interface called Fastlane through which borrowers could apply for PPP loans of up to $50,000. Womply gathered the information, handled borrowers' questions, ran fraud identity checks, and bundled the loan documents into a package that is steered to one of its partner lenders. All the lender will have to do, Womply said, was submit the paperwork to the government and fund the loan. A big impact. Actually, Fastlane did actually work. It worked very well, as you already know. A big impact. When BlueAcorn and Womply started their systems in late February, the volume of PPP lending shot up, largely because of the two companies' efforts. Lenders made 5.8 million loans of $50,000 or less this year, up from 3.6 million in 2020. The program's average loan size dropped from just over $100,000 last year to $41,560 this year. And the six most active lenders this year each partnered with BlueAcorn or Womply or both. BlueAcorn worked with just two lenders, Prestamos CDFI, a nonprofit lender, and a small mortgage lender called Capital Plus Financial. Last year, Prestamos made 935 PPP loans totaling $27 million. This year, working with BlueAcorn, it made 494,415 loans, more than any other lender, for a total of $7.7 billion. That's a heck of a jump. That's crazy. What we did together is absolutely incredible, said David Adaming, the chief executive of Chicanos por la Cosa, the parent organization of Prestamos. The myth that you can't serve communities of color or underserved communities with a technology model at scale, we've blown that away. Womply's impact was even broader. It teamed with 17 lenders and processed 1.4 million loans, totaling more than $20 billion. About 7% of the total PPP money given out this year. It was an amazing team effort, said Adam Siri, the managing director of Harvest Small Business Finance, Womply's largest lender. I know many of you know about Harvest. Some of you guys know about Capital Plus too, but I know many of you know about Harvest. I believe I had Harvest as well. Also in late February, BlueAcorn and Womply got unexpected tailwind from a major rule change by the Small Business Administration, which oversaw the loan program. Concerned that women and minority-led businesses were being disproportionately left out, the Biden administration overhauled the loan formula to award sole proprietors, a group that includes contractors and gig workers, loans based on their reported revenue rather than profit. Overnight, millions more qualified for help. Drawn in by the marketing campaigns, they stampeded toward the two companies. By early March, we were overrun with demand, said BlueAcorn's Mr. Calhoun, a private equity veteran who joined the company that month to help manage its growth. We had a 24-hour period where we went from 15,000 new customer service tickets to 27,000, he recalled. Those are Amazon-like levels. BlueAcorn rented call centers and trained hundreds of temporary workers to troubleshoot. I guess that's one of the problems. Womply redeployed nearly all of its 200 employees to work on loan issues. Both companies still struggle to keep up. On Reddit groups and social media sites, thousands of borrowers complained about delays, poor communication, and problem resolving errors. I personally experienced that within my comment section. I try to address it with different videos and try to figure out information about how to go about trying to get problems resolved. And I guess it's still when I resolve a lot of them, according to the comments. Louise Glathorn, an Uber driver in Boone, North Carolina, who goes by Bob, applied on Womply's website on April 7th and signed the paperwork 2 weeks later for a $7,818 loan. But the money, which is listed in government records as approved, has not been paid by Benworth Capital, one of Womply's partners. Mr. Glathorn attempts to reach Womply for help have been unsuccessful. You can never talk to a person or actually make contact, he said. A Womply representative declined to comment on Mr. Glathorn's experience. And many of you have that same experience. Have that same exact experience where you couldn't get in contact with nobody on the phone, through email, it was just crazy. Others had a smoother run. Dan Bork, an Uber driver in San Francisco, saw Womply's ads and applied for a loan in mid-April. 17 days later, he had a $10,477 deposit funded by Fountainhead SBF, another of Womply's partner lenders, in his bank account. For that loan, the process was flawless, he said. It was near flawless for me as well, even though I had Harvest, but it was near flawless for me as well. I didn't have many issues other than in the beginning with the bank account as far as me uploading the information. Then it actually allowed me to use the Connect program, the Connect part of it, where I just connected my bank account. So after that, everything went smooth. The money pours in. The millions of tiny loans the two tech companies enabled, coupled with Congress's decision to make small loans more lucrative, led to gigantic payouts for small lenders. Last year, Prestomos made $1.3 million for its lending. This year, it will collect nearly $1.2 billion, according to a New York Times calculation of lenders' fees based on government data. It's a lot of money. But because of the deals they struck with BlueAcorn and Womply, the lenders will keep only a fraction of their earnings. BlueAcorn will get a significant portion of the $1.2 billion that Prestomos is collecting, and Jose Martinez, the lender's president, he declined to disclose the deal's terms, but said they were fair and aligned with each partner's contribution. So right here you says Prestomos made over $1 billion in PPP loan fees in 2021. You see it here, 935, 494,000. Total amount loan, 27 million, 7.7 billion. Total fees earned, 1.3 million, 1.2 billion. That's $4.71 per $100. That's $15.30. It's a huge jump. BlueAcorn declined to comment on its fees, but an earnings report this month from Capital Plus Financial, the other lender that partnered with BlueAcorn, provides some clues. This year, Capital Plus made 473,241 Paycheck Protection Program loans totaling $7.7 billion, for which it will collect $1.1 billion in fees. In the earnings report for the quarter that ended April 30th, the publicly traded parent company of Capital Plus said that the lender earned $464 million in fees during the quarter of its loans. Of that amount, it kept just $150 million. So more than half went to BlueAcorn. Through its two partners, BlueAcorn will take in at least $1 billion this year on the loans it processed, according to a Times calculation and two people familiar with the matter. Capital Plus Financial began making PPP loans earlier this year, and you can see it right here. Take a look at that. Okay. Womply is poised for an even bigger haul. 7 lenders that partner with Womply on Fastlane agreed to pay the company at least half, and often much more, of what they collected on each loan. According to 5 people with knowledge of the financial arrangement, the company is likely to take in fees of $1.7 billion to $3 billion, according to a Times analysis. But Womply is locked in fee disputes with some of its partners. At least 3 lenders signed deals that they believe would operate on a sliding scale, where they would owe Womply the top rate, 80% of the lender fee, only on loans above a certain volume threshold. But when it came time to collect, Womply told 2 of them that it believed it was owed its top rate on every loan it had processed. So here's the Womply fees for the small loans added up. All right. For several lenders, the fees they owed to Womply increased from 50% of what they collected to 80% as Womply sent more loans their way. That, coupled with a flat $250 per loan charge, left lenders owing Womply their entire fee on some loans. $10,000 loan, fees paid to lender $2,500, $3,000, $1,500, $1,000, $500. Lowest amount paid to Womply $1,500, $1,000, $500. Highest amount $2,250, $1,450, $500. Lender kept $250 to $1,000, $50 to $500, 0. Womply declined to comment on its fees. In a statement, the company said it was incredibly proud of its work delivering PPP funding to 1 million businesses through its partners. 2 lenders said they would never work with Womply again. At those rates, I'm in the hole and losing money on many of these loans, said one lender who asked to be anonymous because Womply's loan contract prohibits lenders from disclosing its terms. It's disturbing and disgusting. The reason why I changed that word, because I couldn't say that word. I kept getting tongue-tied, so I just changed the word up. So, as you can see, Womply made a boatload of money, and it looks like they cheated a couple of people. I won't say people, I would say cheated a few lenders, it sounds like. Or the lenders didn't like the deal they got. Or I could say this, maybe the deal was set up straight, but then when it came time to pay up, Womply said, hey, nah, you got to come up off all that. That's 80%, dude. You know, so I guess you go into the deal and it comes out not the way you wanted it to go, and you end up losing. And I mean, that's just what it is sometimes. I mean, it's the way business goes. And apparently the lenders didn't make out like they thought they would, but they was looking at the volume and didn't realize that they were going to lose on the other end. Hey, but for the most part, I had no issues with Womply. I know a lot of you did. And Womply's still trying to get things going. You know, they still want you to sign that petition so they can get more funding. And now I see why they want more funding, because they made out like a big, fat, juicy rat just sitting in the sewers of downtown New York, Times Square, you know, Chicago, Miami, LA fat rat. You know what I mean? So I see why they want more PPP funding, because they made out like bandits. I mean, they just raked it in. You know what I'm saying? So that's the story with Womply. That's what's going on with them. And you see, that's the story with Womply and BlueAcorn. That's the story of seizing the opportunity. You see there's a need. You see there's a problem. You figure it out. You solve it. And you charge in. And you take control. And you see that you can get wealthy. Now, that's a large scale of the story, but you could do it on a smaller scale again, like what happened with you. and most of us. They shut down the FPUC. They shut down the PPP. A lot of people wasn't getting EIDL at the time because of the targeted situation. So what you do is you say, okay, fine, we lost jobs. Pandemic hit. How can we come in and make money? And you go in by, doing things like hitting the Wealth Dasher link and start dashing, and you change that into a positive, start making $500 to $1,000 plus per week. Even if you don't have a car, you click the Wealth Hire Car link, and as well as the Wealth Dasher link, and you could use the Hire Car to dash and still make $500 to $1,000 a week. You can start rebuilding your credit or getting your credit together, establishing credit by clicking the credit monitoring link in the description below, seeing your 3 scores from all 3 bureaus, Equifax, Experian, and TransUnion. You get your reports to see what's on those, and you go from there and start building your credit, and that way you can qualify for financial instruments or financial products through your own financial institution. You don't have to worry about the government. You can get high limit credit cards in no time flat within 60 seconds. You can get auto loans, qualify for mortgages. You can get what you call that line of credits. You can get all of that. And also with this money, you can also shop and get a lot of cash back through my favorite cash back site by clicking the cash back link below. So hope this was informative. With just a good read, you can see what the opportunities are out there and how you can take advantage of them. Alright, subscribe to the channel, subscribe to It's OAC, and until the next video, let's get this money.